Imagine someone tells you about a stock that's making people rich almost overnight. Everywhere you look, people are talking about it. Financial influencers call it the next big opportunity. Your friends are already investing, and social media is flooded with screenshots of unbelievable profits. At first, you ignore it. But after hearing about it over and over again, you start wondering if you're missing the opportunity of a lifetime. So, without really understanding what the company does or how it actually makes money, you decide to invest. For a few weeks, everything feels perfect. Your portfolio is growing, your confidence is higher than ever, and it almost feels like making money in the stock market is easy. Then, one morning, you wake up to a completely different reality. The stock begins to collapse, panic spreads across the market, and within days, most of your money is gone. At that moment, the only question running through your mind is, how did this happen? According to Warren Buffett, the answer has nothing to do with bad luck or bad timing. The real mistake happened long before the market crashed. It happened the moment you invested your money into something you didn't truly understand. And that's exactly what brings us to Warren Buffett's rule number 3. Never invest in what you don't understand. It sounds like common sense, yet it's one of the most ignored rules in the entire investing world. Every year, millions of people buy stocks simply because they're trending, because someone on YouTube recommended them, or because everyone around them seems to be making money. But Buffett has spent his entire career doing the exact opposite. He believes that if you cannot clearly explain how a business works, how it earns money, and why it will still exist years from now, then you have no reason to put your hard-earned money into it. That simple principle has protected him from countless bad investments while helping him become one of the greatest investors in history. Now, you might be wondering, what does Warren Buffett actually mean when he says, never invest in what you don't understand? Does he expect you to know every detail about a company? Do you need a finance degree or years of experience before buying a stock? Not at all. Buffett isn't asking you to become an accountant or a Wall Street analyst. He's asking something much simpler. Before investing your money, you should be able to explain, in plain English, what the business does, how it makes money, and why customers keep coming back. If you can't explain those 3 things to a friend in less than a minute, chances are you don't understand the business well enough to invest in it. Think about it this way. Imagine someone asks you to invest in a small coffee shop in your neighborhood. You already know how that business works. They sell coffee, snacks, and drinks. Customers walk in every day, pay for what they buy, and the owner earns a profit after covering expenses. It's a simple business model, and even if you've never owned a cafe, you can still understand how it generates money. Now compare that to a company developing highly advanced biotechnology or complex semiconductor technology. If someone asked you how those companies actually make money, would you be able to explain it with confidence? Or would your answer simply be, I heard it's a good stock? That's the difference Warren Buffett is talking about. Buffett believes that investing should never be based on excitement or popularity. It should be based on clarity. The more clearly you understand a business, the more confidently you can stay invested when the market becomes unpredictable. Because once you truly understand why a company is valuable, you won't panic every time its stock price falls. And that's exactly why Warren Buffett's rule. Number 3, never invest in what you don't understand, isn't really about avoiding certain companies. It's about avoiding decisions you can't confidently explain. That single mindset can protect you from mistakes that many investors spend years trying to recover from. One of the best examples of this rule came during the late 1990s when the internet was changing the world. Every day, new technology companies were entering the stock market, and investors believed they had discovered a shortcut to becoming rich. It didn't matter whether these companies were making profits or not. As long as they had .com in their name, people were willing to invest. Newspapers called it the future. Television channels couldn't stop talking about it, and ordinary people were investing their life savings because they were afraid of missing out. It felt like anyone who wasn't buying technology stocks was making the biggest mistake of their life. During that time, Warren Buffett was heavily criticized. Financial experts claimed he had lost his touch. Investors laughed at him because he refused to buy many of the internet companies that everyone else was chasing. Some even said that Buffett didn't understand the modern economy anymore. But instead of trying to prove them wrong, Buffett remained calm. He openly admitted that he didn't fully understand many of those businesses, and because of that, he simply refused to invest. He wasn't embarrassed to say, "I don't know." In fact, he believed that saying, "I don't understand this business" was far smarter than pretending to understand it and risking millions of dollars. Then came the year 2000. Almost overnight, the excitement turned into fear. The famous dot-com bubble burst and hundreds of internet companies collapsed. Investors who had been celebrating huge profits suddenly watched their portfolios lose 50, 70, or even 90% of their value. Some companies disappeared completely. Years of savings were wiped out in just a few months. While millions of people were asking what went wrong, Warren Buffett had already protected himself with one simple decision. He never invested in businesses he didn't understand. That's the true power of Warren Buffett's rule number 3. Never invest in what you don't understand. Sometimes the smartest investment decision isn't choosing the right stock. It's having the discipline to walk away from the wrong one. The biggest danger in investing isn't a market crash, it isn't inflation, and it isn't even a bad company. The biggest danger is investing in something simply because everyone else is doing it. Every market cycle creates a new trend that promises easy money. One year it's internet companies, another year it's cryptocurrency, then electric vehicles, artificial intelligence, or the next can't-miss investment. The names change, but human behavior never does. People stop thinking for themselves and start following the crowd. They assume that if millions of people are buying something, it must be a good investment. But Warren Buffett has always believed that popularity is never a reason to invest. In fact, when everyone is rushing in without understanding what they're buying, that's usually when he becomes even more cautious. Before Buffett invests a single dollar, he asks himself a few simple questions. How does this company actually make money? What gives it an advantage over its competitors? Will people still need its products or services 10 years from now? And perhaps the most important question of millionaires, or invest because the stock is trending. He simply walks away. To many people, do I truly understand this business well enough to stay invested even if its stock price falls tomorrow? If Buffett can't confidently answer those questions, he doesn't try to guess. He doesn't follow experts' copy bile that looks like missing an opportunity. But to Buffett, protecting your money is always more important than chasing quick profits, because in investing, the opportunities you avoid are often just as valuable as the ones you choose. The good news is that you don't need millions of dollars to follow Warren Buffett's third rule. In fact, this principle has nothing to do with how much money you have. It has everything to do with how you make decisions. The next time you come across an investment opportunity, don't ask yourself, "How much money can I make?" Instead, ask a much more powerful question. Do I actually understand this business? Can you explain how it earns revenue? Do you know who its customers are? Can you identify why people choose this company instead of its competitors? If those questions leave you confused, that's not a sign to invest faster. It's a sign to slow down and learn more before risking your money. One habit that Warren Buffett has followed throughout his career is continuous learning. Before investing in any business, he spends hours reading annual reports, understanding the company's business model, and studying how it has performed over many years. He never relies on a single headline, a viral social media post, or someone else's opinion. That's exactly what separates an investor from a gambler. A gambler hopes things will work out. An investor understands why they should work out. The more knowledge you have about a business, the less fear you'll feel when the market becomes volatile. Because confidence doesn't come from seeing your portfolio in green. Confidence comes from understanding exactly what you own and why you own it. So before you invest your next dollar, make yourself one simple promise. Never let excitement make your decisions for you. If a business feels too complicated to understand today, there's nothing wrong with walking away. The stock market will always create new opportunities, but your hard-earned money deserves patience, not pressure. That's the real lesson behind Warren Buffett's rule number 3. Never invest in what you don't understand. You don't have to invest in every company the world is talking about. You only need to invest in the businesses you truly understand. And sometimes the smartest financial decision you'll ever make is the investment you choose not to make. So, if there's one lesson you should remember from today's episode, let it be this. Warren Buffett's rule number 3 is simple. Never invest in what you don't understand. The stock market will always offer exciting opportunities, but excitement alone has never created lasting wealth. Knowledge does. The more you understand the businesses you invest in, the more confident you'll become during market ups and downs. And remember, successful investing isn't about buying every stock that's trending. It's about making a few smart decisions and having the patience to let them grow over time. If you found this lesson valuable, make sure to subscribe because we're breaking down all 7 of Warren Buffett's timeless investing rules, one episode at a time. In the next episode, we'll explore Rule number 4, another powerful principle that has helped Buffett build one of the greatest investing careers in history. Until then, keep learning, keep investing wisely, and remember, money doesn't grow because you chase opportunities. It grows because you make better decisions.